Welcome back to Forex Bootcamp for Newbies. It is your girl, Dr. Samara, and I am back with another episode. As you already should be aware, in episode 1, I discussed what is Forex and how does Forex work. Now in this episode, I am going to be moving forward into how to identify the market structure and what is currency pairs. So if you haven't already, go ahead and go like, comment, and subscribe to your girl's channel because it is what? It is free, and let's get into it.
He want the scoop, she want the tea, she want the tea. I cannot speak, we keeping it street, we keeping it street. I took a loss, but you still gon' get beat, you still gon' get beat. How much it costs? It never been cheap.
In Forex, basically, you will always be trading one currency against the other. This means, or what it is known as, the currency pair. So you will be trading two currencies. When it comes to trading Forex, you will always be trading a pair. That's just what it is. With the pair, you have the base currency and then you have the quota currency. The base currency is always going to be the first currency of that pair, whether it be GBP, USD, EUR, USD. I mean, you name it. There's so many different pairs out there. That is what the base currency represents. Now, the quota currency is going to be that second pair or that second currency after the first currency. So, for example, for EUR USD, USD is actually going to be the quota currency. Now, is this something that you should really know for real as a beginner? No, not really. But, I love to give you guys as much knowledge as you should know, just so that you feel comfortable with getting into the market. Even though this is just some extra knowledge for you guys, using that same example as I stated with the base currency and the quota currency, let's say EUR USD equals $1.10. Okay. Basically what that means is that one EUR represents $1.10 of USD. So hopefully that makes sense. If it does not, rewind this video so it does make sense. And I'll show you guys an example of what a sell would look like and what a buy would look like so that you guys can also see what I am referencing. All right, so right now I'm actually using my iPad and I'm actually using my trading view. So I only use trading view for educational purposes only. It's only for my YouTube channel, simply because it just looks better. It's much cleaner. But this is not the trading platform that I use to actually go into the market and make my money. I only use Hola Prime. And then of course I also use CoinEx for my compounding account. So again, TradingView is only for educational purposes only. I do not use this as my main platform for trades. So let's say, as you guys can see here, you see EUR USD and it's on the day chart. As you notice here, it's 1 day. The market is actually not moving right now because it is a Saturday. So it is frozen. Now, the trip part about it, the reason why it is frozen on our half is because we don't have trillions or millions or thousands and thousands of dollars to be able to invest or trade over the weekend. Actually, your good government as well as your banks are trading over the weekends. But when it comes to retail traders, you are not trading over the weekend. All right. So as I stated to you guys, I wanted to show you guys what a sale opportunity would look like. And so I'm going to go ahead and get some lines going on so you guys can see what a buy looks like. All right, let's go ahead and we'll go ahead. We'll do this nice little cell right here. All right, I'm just going to zoom in. So as you guys notice here, if you do notice, you should notice how pretty much this right here that I just circled, this was a small sale that just occurred. The reason why I say that is because there's a lot more red candles. Red candles means a sale, okay? This means you're going in for a sale, right? This is a sale, okay? Now, I'm going to show you guys what a buy opportunity is. So let's go in for a sale. So this is a sale. My arrow that I just showed, that's a sale, right? We're going to change it to red. That's a sale. Let's make the thickness a little bit thicker here. So that's a sale. What I just circled is a sale. Now I'm going to go ahead and I'm going to show you what a buy is, which you should already know with the trend line going upwards, right? The buy is going to be this bad boy right here, okay? That's a buy. So what I just circled in red, that is technically considered as a buy. As you notice, we have a lot more green candles, okay? Sometimes a buy could be a blue candle. Normally, it is a blue candle, but in this case, they are showing it as a green candle, okay? So in this case, we notice that this is a buy, okay? And so I'm going to go ahead and draw my arrow. I'm going to actually change that to blue. And this is basically an example of the market structure of whether or not you decide or believe that the market is either going into a sale or into a buy. So when it comes to currency pairs, they are grouped into 3 different main groups, okay? So you have your major pair, your minor pair, and then you have your exotic pairs. When it comes to your major pairs, this is going to be EUR USD. This is also going to be GBP USD, USD JPY. So major pairs, always think of it as they always is going to include the US dollar. Okay, so that is your major pair. Now, when it comes to your minor pairs, this is going to be related to no US dollar, like EUR GBP or AUD JPY. Those are the pairs that are considered as minor pairs. Pretty much with the exotic pair, this is going to include your major pair. So again, anything that includes with the US dollar, and then it's also going to include like your emerging country. Okay, so as I stated before, you have USD and South African or South Africa, or you may have USD and Turkey. Okay, so those are your exotic pairs. Now, when it comes to which pair you should move forward with trading, I always suggest the major pairs because they are a little bit more stable, they have a little bit more volume, and they have more liquid. With the US dollar alone, it is a little bit more stronger compared to a lot of other country currencies. So again, you will be making a lot more profit.
This Halloween, Holoprime is summoning traders from every corner of the market. Take advantage of their good funding deals with discounts ranging from 35 to 50% off on $5,000 to $100,000 Forex accounts. Grab your $5,000 account and get 35% off with code SPOOKY in all caps 35, or go big, claim your 100,000 account and slash 50% off using SPOOKY in all caps 50. But hurry, these haunting offers vanish at midnight, October 31st.
All right, so now that you know what a currency pair is, let's get into the market structure. So with market structure, it's basically how the market moves. It's pretty much the DNA of the market. So with price, it does not move randomly. It moves in a pattern. So you're going to have like your higher highs, you're going to have your lower lows. It would never be just random, like randomly high, and then it just keeps going high, if that makes sense. It will always be like high, and then it will go to a lower high, and then back up to a high. It goes into a pattern. So you kind of recognize how the market is moving. And that is pretty much what market structure is. Now, I'm going to show you guys pretty much how you can identify the market structure, right? So I'm going to show you guys what an uptrend looks like and what a downtrend looks like. Basically, with an uptrend, I'm going to show you here with the trend line. An uptrend is literally this right here. This is an uptrend. Okay? Basically, as you see here, right? That's the wrong one. Let's go here. Let's do that. All right. So right now I'm just showing you guys all right. So as you guys can see here, pretty much this is an uptrend as I stated, right? And what I just drew out was I was trying to get you guys to see like the vision of a mountaintop, right? So with some of these mountains, you notice that they're more of a valley peak. They go up and then they go down, they go up, they go down. Some of them, as you notice, is they go up, down a little bit, then up, down a little bit, then up, right? So as you guys can see here, I was just trying to show you that the market does not move randomly, okay? So it's not just gonna say, like it's not gonna just keep going up for years and years and years. The market has drawdowns. It's going to go up for some time, then it's gonna go down. But as you notice, it goes right back up. Okay. And so ultimately looking at this market, it is going for a very much uptrend. Okay. You don't notice that it's not really going completely down. It keeps hitting at a higher high, or it keeps meeting at a higher low, but it's still elevating as an uptrend. Versus if we were to do a downtrend, this is a really great example here. This right here, this right here is a downtrend, guys. As you guys notice here, it never hit past this line, which is the trend that I just said. It never hit past that line, okay? This is a downtrend. It keeps going down, up, right? So it goes down and up, down, and up, right? That is your downtrend. So this is what it would look like for a sale opportunity. So I just wanted to show you guys what it looks like when you are going for a bull market versus a bear market. So how do you identify the trend, right? So I'm just going to show you guys because I kind of already went over it. So pretty much identifying the trend is basically looking at your older time frames. Right now, currently, I'm looking at the day chart. This is how you identify the trend. Right now, because this happened in the past, we're not worried about this anymore. This area right here, where it's a slight sale, we're not worried about that anymore because the market right now is right here, which is 1.16535. That's what we're focusing on for the market. The trend is going for a buy, okay? The trend is a buy. As I mentioned to you guys before, this area of the candles has not hidden or hit my my trend line that I just created, right? Versus in the past for the sale, it did not hit my trend line back in the past, right? So that is how you determine your trend. So why does this matter? It matters because it literally will avoid you from revenge trading. Yes, revenge trading. This means emotional trading. You never want to be in a position where you are in the market angry, sad, upset, anything that is a negative impact to your nervous system. And I mean that. It's very important to have a strategy and to go into the market with some sort of understanding of what the market structure is at that current time. Okay. If you do not have any of these pointers before you get into the market, you will lose a lot of money. It does not matter what type of trader you are, whether you be a swing trader, a day trader, or scalper trader, all different types of traders alone. They make sure that they have a strategy and understand where the market is going before they make that trade, because it is better to keep the money that you have deposited. Okay, it's better to have your money than to lose it due to basically preventable things. It's very important to know and earn as much or gain as much knowledge as you can in the Forex trading world before you step into the trading platform. It's very important because you can and you will lose a lot of money if you do not decide to put in the time to truly understand Forex. So now you understand what a currency pair is and what the market structure is. And you should already know what Forex is and how Forex works. So you are definitely one step closer to becoming a trading pro. However, we are just getting started into this Forex bootcamp. And of course, there will be an episode 3, and we will be discussing supports and resistant lines that is made simple for you to hurry up and make some income. All right. So if you haven't already, go ahead and go like, comment, and subscribe to your girl's channel, because it is what? It is free. And thank you guys so much for tuning into episode 2. And I'll see you guys in the next episode. Bye.